Ray Dalio's investment philosophy. 1. Investment possibilities and dangers are influenced by the economy. Macro investor Dalio looks at economic patterns to spot possibilities and spot threats. In contrast, the micro investor gives more importance to company-specific technical research. In the 2000s, Dalio's macro outlook brought Bridgewater particular praise. Since he has studied the economy for a long time, Dalio recognized warning indications before the 2008 financial crisis. He made adjustments to the Bridgewater portfolios to get them ready for a downturn, and it worked. While the typical hedge fund lost 19% of its value in 2008, Bridgewater's Pure Alpha fund increased. 2. Investors are seriously threatened by inflation. Inflation's capacity to erode purchasing power and wreak havoc on investment returns is something Dalio respects in a healthy way. He has therefore long advocated for using gold as a backup form of currency. The all-weather portfolio, a well-known Dalio investment approach, includes a 7.5% allocation to gold. The all-weather portfolio is Dalio's go-to investment strategy for navigating uncertain economic periods. In addition to holding gold miner and producer companies, Bridgewater also holds gold funds. With a 2.15% allocation, the gold ETF SPDR Gold Shares is Bridgewater's 11th largest investment overall. 3. By mixing assets that are uncorrelated, investors can reduce risk. Dalio strongly supports diversification. To lower your risk-to-return ratio, he specifically advises diversification over 15 or more in correlated investments. Assets that are not connected do not move in tandem, either positively or negatively. For instance, there is little link between gold and the S&P 500, so a decline in the S&P 500 doesn't always affect gold spot prices. Bridgewater portfolios have a wide range of assets, industries, and currencies. In addition, Dalio has acknowledged using cryptocurrency as a diversification tool. 4. On fully priced stocks, investors should take profits. Dalio does not just purchase and hold stocks. He favors selling pricey stocks for a profit and then reinvesting the proceeds. The portfolio is rotated, as he puts it. Targets for reinvestment should be cheap stocks, good companies that are trailing their industry or the overall economy. This rotation is seen in the 2021 portfolio adjustments at Bridgewater. Bridgewater upped its holdings in emerging markets funds while decreasing its stake in the SPDR S&P 500 fund. The action reflects the perception that the window of opportunity for U.S. large caps may be closing. In the coming months, it might be preferable to choose smaller, developing economies. Time will tell if Bridgewater's wager comes off, although the S&P 500 has exhibited weakness in January 2022. 5. One of the main causes of investment losses is bias. Investors frequently have a positive or gloomy outlook on the market or a particular investment. Those are prejudices. Any type of directional thinking can persuade an investor to hold positions for an excessive amount of time and miss the chance to sell at a profit. Admittedly, letting go of biases is not humanly conceivable. You can examine your investment decision-making process on a regular basis. After recognizing your directed beliefs, consider the alternative situation. Dalio believes that diversifying is the best course of action in the situation, just in case your presumptions about a certain asset class, industry, stock, or the market as a whole prove to be incorrect. Investments Ray Dalio avoids. Economic conditions determine which investments Dalio steers clear of. The assets and liabilities that you would most like to have, and those that you would most like to avoid alter with the paradigm that is in place at the time. In his words, Dalio believes that the paradigm we are currently in produces negative inflation-adjusted returns for cash and bonds. Cash. As previously mentioned, Dalio worries about inflation in the United States, Europe, and Japan. According to him, These economies are at risk from three primary factors: spending that exceeds income, social and political turmoil, and China's growing influence as a global force. In light of these variables, he advises decreasing cash holdings, not just in dollars, but also in euros and yen. Of course, the majority of investors still want some cash on hand. Although it may have poor to negative returns, cash is nonetheless very useful in times of monetary crisis. Bonds, for the same reasons, Dalio advises limiting bond holdings. He encouraged minimal exposures to dollar, euro, and yen currency and debt assets in a January 2022 LinkedIn post. More so than in the past, Dalio now has a bearish outlook on bonds. That is clear from the fact that his 1996 developed all-weather allocation does suggest a substantial debt position. The all-weather portfolio is made up of 30% U.S. stocks, 40% long-term treasury bonds, 15% intermediate-term treasury bonds, 7% diversified commodities, and 7% gold. Please subscribe for more investing videos.